Evergrande is just the first domino to fall. So we've seen news stories come out about Fantasia, China Properties Group, Sinic Holdings, Country Garden. Basically, all of the large Chinese real estate developers have either already missed a sizable bond payment or are about to miss a sizable bond payment. Evergrande is currently being liquidated right now. The company is trying to sell its headquarters in Hong Kong unsuccessfully. The Wall Street Journal last week even put out a story talking about how the total amount of debt for Chinese real estate developers is at least 5 trillion. From conversations with Emma Mullman, Kyle Bass, my own research, Denny McMahon, and going through China's shadow banking system, I think the Chinese real estate developers, the total amount of debt is far larger than just 5 trillion. That's just the official number. The real number could be much, much larger than that. And the Chinese economy is dealing with a lot of problems right now. It is not just Chinese real estate developers. Also, not only are Chinese real estate developers having problems, but according to one of my top sources in China, who is also a successful real estate investor in China, he owns properties, either luxury condos or single-family homes in a number of Tier 1 and Tier 2 and Tier 3 Chinese cities. The real estate prices in Tier 2 and Tier 3 cities are down an average of between 18% and 25% in the last 4 months. So just in the last 4 months in Tier 2 and Tier 3 cities, a lot of those cities, Evergrande is the major developer in, real estate prices are down a lot. Now that may create some more demand for some value buyers, but that will start a panic. And there is also an energy panic, and there is panic buying of coal. There is panic buying of LNG contracts with American companies. There is panic buying of oil to import into China because of the electricity shortages. Go and listen to my Emma Mullman interview that I put out in the last 2 weeks. And she talks about how the Chinese Communist Party, the central planners there, had to make a decision of where to allocate the electricity. And they chose a lot of the electricity to go to the residential areas in Tier 1 cities instead of every single day, Monday through Friday, to the factories. So that is also causing supply chain problems. If factory owners are going to get their own diesel generators, try to get their own electricity, trying to save themselves, trying to save their businesses, I've seen interviews on China Insights and others with factory owners in China recently talking about how their electricity costs with diesel generators and other ways to try to get electricity that's not on the normal power grid is up 10x or more. So that's going to go into cost of goods sold. You also have bad stagflation in China. You also have the chip shortage. But even in a major Tier 1 city like Shenzhen, which is in the Pearl River Delta, which is where HSBC Bank has an enormous amount of bank branches. They were bragging about it on their investors' presentations every single year for years. Go back and look at their old investors' presentations from 2015, 2016, talking about how they're opening up enormous amounts of branch locations in the Pearl River Delta. So that's Shenzhen. Those are the mainland Chinese cities outside of Hong Kong, if you're not familiar, that are close to Hong Kong, if you're not familiar. HSBC Bank, while all this is melting down, trillions of bad debt with these Chinese real estate developers. So Evergrande is just the first one. Then you have Fantasia, China Properties Group, Sinic Holdings, eventually probably Country Garden, which is the largest. HSBC Bank shares are miraculously, over the last month, rallying. HSBC Bank shares have gone from about $24 in the last month up to almost $30 a share. You can't make this stuff up. How phony and ridiculous. I wonder if insiders, if executive in HSBC Bank are either buying the stock to try to fool people, or if they're doing share buybacks with the free cash flow they have now, anticipating a crisis in the future, hoping to get out with a golden parachute out of the company before the ish hits the fan. SHTF. Since I'm not going to cuss on this short little video. But the Chinese government is now starting to sell dollar bonds too, another red flag, which is very unusual because last year when the dollar was weak, the Chinese companies were actually borrowing enormous amounts of dollar denominated debt again. So every time the dollar rallies, Chinese companies get in trouble. But according to one of my top sources inside mainland China, the one who is a real estate investor, his property holdings in Shenzhen, which is a tier 1 city in the Pearl River Delta, are down 25% in just the last 4 months. So property prices in Beijing and Shanghai have not crashed yet, but in tier 2, tier 3 cities, also tier 4, and then now apparently even in parts of Shenzhen, property prices are starting to fall. And these are major cracks in China's economy because the real estate prices are the major source of collateral. Real estate is the major source of collateral for all that bad debt, for all those derivatives in China's trillions of dollars of shadow banking system, many trillions. So what will the Chinese Communist Party and the People's Bank of China do? Will they end up doing full-scale bailouts? Comment below the video if you think they're going to do full-scale bailouts. It seems that they're allowing, for now at least, Evergrande to fail, especially the foreign bondholders like in the bond fund indexes like BlackRock and UBS and some of the other large banks. That was my Dr. Mark Faber, Dr. Doom laugh. Finally, if you like content like this and want to help keep content like this free so it doesn't all end up behind a paywall, or you want far more in-depth content, research, financial education, and analysis than I provide in this short little free video, there are now over 180 articles, charts, and audio podcasts behind the paywall, all for the cost of a Starbucks cup of coffee per month, only $5 a month. I think it is one of the best deals out there. And just in the last 17 or so weeks, there are 30 new articles out on a lot of interesting topics about global macro, companies, and sectors. A lot of articles out about gold miners, which ones are keeping their costs under control for now, how royalty and streaming companies have their profit margins protected, which gold miners are increasing their dividends, so which ones are you getting paid more with a dividend to wait for gold prices to rise, and my opinion of the Kirkland Lake Gold and Agnico Eagle merger is the last article that came out in the last couple weeks. Also, I'm going to try to get a uranium update out in the next couple days, hopefully by the end of the week. My health problems are not doing too well lately. I'm doing the best I can. So if I could wrap up this short little video very quickly, the bottom line here is that Evergrande is a big deal, and you're starting to see the other Chinese real estate developers, the other large ones. Now, Country Gardens has, I believe, only missed one bond payment, but you're starting to see more and more of them. This is starting to fall like dominoes. This is starting to gather momentum like a snowball, a giant snowball in an avalanche rolling downhill. You can pick your analogy. But this is gaining momentum, and the question then is, will the People's Bank of China, which is China's central bank, will the Chinese Communist Party, and they do not need Congress to vote, they do not need to have politicians arguing with each other and get a bunch of votes or buy a bunch of votes or do pork barrel legislation or log rolling or make trades to get votes like in Congress here in the United States. Will the Chinese Communist Party approve bailouts for Evergrande and all of these other Chinese real estate developers? Because if they don't, these bond payments are starting to be missed regularly now, and it's not just Evergrande. You're starting to see more and more of them in the last week or two, and it's starting to really spiral out of control. But we have not seen a lot of news stories about a lot of the large Chinese banks yet, and shockingly, HSBC bank shares are rallying. You really can't make this stuff up. So while HSBC Bank says they only have a tiny amount of exposure, go back and look in past investors' presentations of HSBC Bank from 2013, 2014, 2015, 2016, where they talk about all the bank branches they were opening up in the Pearl River Delta, how much in real estate loans and small business loans and factory loans they were going to be giving out. They didn't put numbers on them. They intentionally didn't put numbers on them, but they were claiming that they were going to have the most foreign bank branches in China by the time they were done with their expansion. And yet HSBC Bank shares, with all these news stories about Chinese real estate developers, HSBC Bank shares are rising. While the Chinese economy seems to have more and more and more problems. And that's a large chunk of HSBC's legal annual profits. The majority of HSBC's legal annual profits come from Asia, and more specifically come from China.